Good morning, everybody. Richard Calhoun, Creekside Realty, real estate broker with 40 years experience here in Silicon Valley. To jump right into the data, which is what's happened in the last week here in Silicon Valley. This shows you available inventory. That's the blue line. Notice how it's essentially right on top of the yellow line. That means we have exactly the median amount of inventory that we've had for 5 years. And the 5 years I use are 2015 through 2019. So in a nutshell, when people say we don't have enough inventory, we actually have the very typical inventory. What we're having is this deep red line up here. We're having more offers. We're having about 25% more offers than you would expect. So we have surplus demand compared to the 5-year median that I'm using, which is 15 through 19. The other line that's on here is the number of new listings coming on the market, how much water's coming into the reservoir. And again, that's right on the yellow line. So that is a typical, exactly what you'd expect to happen. So what's happening with the sellers, it's right where we'd expect it to be happening. What's happening is we have a lot more demand than we've historically had in the recent years. And again, the 5 years I'm using are 15 through 19. The key measure is days of unsold inventory. And that's simply the ratio of between what's available and how rapidly things are selling. So the blue line is the current data. Again, the yellow line is the 5-year median, and you're below, which in this case means you have a more rapid marketplace. So the median is somewhere up here around, call it 27 days of unsold inventory, which means you would sell everything on the market. And the inventory and the benchmark I'm using is Santa Clara County, San Mateo County, single family homes and condos and townhouses, everything in one big blender. And where we're at right now is basically at 20 days. So we're selling things in about 6 days faster. And that may not sound like a lot, but it really is, because the closer you get down to zero, the harder it is to get it any lower. In fact, it's going to be really hard to get it much below about 6-7 days. And the reason for that is most listing agents and most sellers are not going to look at offers as soon as they put the house on the marketplace, which is what would happen if it was allowed to happen. People want to get time out there, especially with the pandemic, and have to have individual appointments and no open houses. I've added a little more graphics to this slide, and I've changed the color a little bit. The current month is now in purple because red I use tend to indicate red hot market, and sometimes the current week will not be red hot. So it's now purple, and it's indicated over here. The best month ever is now labeled on the graph, so I won't have to point it out every month. And the blue line is the worst month ever. And so you can see the purple line is actually down a little bit from the recent weeks, but it's still very strong. You can see the dotted lines down here are the older lines, and the market's definitely improved from there. The dashed lines are sort of the middle range, and that's where the market is. So the difference between the red line, which was, or this is an orange line, this is the 24th, the bright orange is the 10th, the gray line in there is the 17th. So you can see that there's some bounce back and forth, but they're all pretty well clustered together. The one thing that I will point out, and it'll become a little bit more apparent, this is again the macro. This is everything in one blender. The slope of this line and this line look pretty matched. And just for the clarity, this line up here is not the macro data. The line up here is single family homes in Santa Clara County only, because that's the only data I had. I will probably go back, since I'm pretty confident those are going to be the worst, the best, and the worst month, and get that data so we're comparing apples with apples. But again, the key now is as we go this direction, the market's improving. This is the sale price to list price distribution for each given week. And then here is looking at the appreciation. And I probably will start dropping some of these off, but I've added again some new information. This is the average appreciation, and it's strictly the average of those 7 numbers there. It's not the weighted average, which would be more accurate. But this is to give you a sense. Now you have 14% appreciation just 4 weeks ago, then 16% appreciation, then basically 17.9%, now 18%. What's also interesting is the condo market is actually doing fairly well now as well, even though it's a slower marketplace. The other thing that we talked about briefly last week was this is the median price for each of the different micro market areas for the entire calendar year 2020. And when would that median price have been achieved? Well, that's really not the question, but the median number of transactions did not happen until August 10th. So if the middle point where you're balanced of your transactions was August 10th, this is not the appreciation in a year. This is basically the appreciation from August 10th of last year until May 1st of this year. So on an annual annualized basis, that becomes an even more impressive number. And you can see some areas are doing better. South County is really on fire. Again, that's along with the pandemic, people are willing to drive a little bit further to get a little bit more house while we're in the pandemic. And with that, I'll let people ask their questions, do a little recap. To get to this meeting, you use the base URL, which is in the green. Then you add the year 2021 and come here Saturday morning at 9 o'clock and you'll be able to ask questions. The handout is posted. You add the word handout, the 8-digit year, month, day code to the end of it. So it would be 0501 to get today's slides. And they were posted about 5-10 minutes ago. And then for archived, it's the root URL. To get to this specific episode, it's the year, month, and date code at the end of the root URL. And again, I'm Richard Calhoun, Creekside Realty, working with buyers and sellers in Silicon Valley for the last 40 years. So with all that said, did anyone have any questions before we get into a little bit of the details? Not hearing anybody, I'll move on. So now what we're going to do is start breaking stuff down. We are looking at active inventory, and we're looking at the previous week and the current week. So you can see inventory has gone down a little bit, which is, it's not a significant number. It's down basically 35 properties and that's again San Mateo County, Santa Clara County, San Mateo, condos and townhouses and single family. So it's everything in one big blender. And so to lose a few homes is not a big deal. In general, the trend is up, but real estate, you're looking at a lot, the live marketplace. So a little fluctuation like that, you really can't say much about. What's interesting is single family, it went up in Santa Clara County and it went down in San Mateo County, in both cases by 4 units. So the number of single family homes is identical between the counties. What's happening is it looks like there's been a little bit less of the condo market. And I think what's happening is the condo market is finally starting to heat up a little bit because they can't get into the single family market, are now willing to settle and move into the condo townhouse market, even though they would prefer single family market in the pandemic and trying to have more privacy. Then if you look at the number of offers, instead of having last week and this week, we have 1 week, which is just a snapshot. And it's so fluctuating that you really can't tell much. But then underneath that is the 5 week, which is usually the benchmark that I use for most of my data analysis. And so you got the condos and townhouses over here on the right, and you can see, it's respectable. If this was, call it 50, and if it was 5 weeks, it'd be 250. So the condo market is heating up a little bit. Same thing here, call that 150 for round numbers. That would be 750. So again, the market's heating up a little bit. You come up to single family homes and you take 303 and multiply it by 5 and you get 1515. And you really haven't had any change. The condo market, the San Mateo market, if you multiply it by 5, you have 550, 565. So here the market's actually slowed down a little bit in the single family in San Mateo County. Then if you look at, and here you can see it because I said it slowed down in San Mateo County. So over the 5 weeks, you had 21.6 days. And now over the last week, you had 23.8 days. Santa Clara County is the fastest, which is why it's in red. I'm sticking with the 5 week because the 1 week is just fluctuates too much. And there really wasn't much difference between 17 and 17.1. If all of a sudden this dropped down to 5, I would go ahead and flag that. So here you can see the macro overall is 20.7 days, call it 21 days. So we would sell everything on the marketplace right now if no new inventory came on the market in 3 weeks. Now, that's not going to happen because, you're always going to have new inventory and some of the stuff out in the marketplace isn't going to sell because it's overpriced or some other reason that makes it unattractive. So it's a theoretical measurement of the marketplace. And then you can see that the condo townhouse market at 26 is slower than the single family home at 18. And the reason these numbers are not an average of these two is Santa Clara County is a larger county. It's got more people, more housing units. And so it is a higher weighted average. Now what we're looking at is the days of unsold inventory. Since I maintain it's the single most important indicator, we're looking at that over time. And basically this is one of the few indicators. The lower the number is, the faster the marketplace is. Because again, it's how quickly would the market sell. And you can see we've been basically floating around here in single family homes in Santa Clara County now, somewhere below 20 days for quite a long time. And by quite a long time, basically since Valentine's Day, maybe Valentine's Day was somewhere right around here, right where we crossed over the 20. Just to put it in perspective, I consider 40 to 80 days to be a balanced marketplace. And so when you're at 20, that's clearly a strong seller's marketplace. And when you're down here below 20 at 17 days, that's just insane. And that's why we have what we have going on in the marketplace. And normally the fastest marketplace is single family homes in San Mateo County. And now it's the slowest out of the three, with condos and townhouses being the second. And you can see the condo and townhouse market essentially improving again, basically since Valentine's Day. It was up here at somewhere about, call it maybe 27, and now it's down very close to 20. So you can see the general trend where single family homes in Santa Clara County dropped down much earlier in the year and has been flat. The condo townhouse market is now playing catch up. Here is days of unsold inventory geographic, and I played around with the intensity. So you can see now in Saratoga with 22 days, it's a lighter shade of red than Berryessa and Milpitas at 12. Yes, it's hard to really see the difference on the map, but there's only so much I can play with it because I need to stay true to my belief that, somewhere around 40 to 80 days is a balanced marketplace. So I basically have no color between 50 and 70. So I've now stretched it out so we don't get to saturated red until you get down to 8. So none of these areas, other than essentially Foster City, is saturated red, but that makes it the gradient pretty shallow. But again, at least it's not all saturated red. So, if you look at this, you can see Atherton Menlo Park is obviously the slowest. Palo Alto is not far behind. Saratoga Las Gatas is not far behind. Almost looks like Central San Jose down here is a little bit lighter shade. And where it becomes hard is where you jump from here over to the coast. Because if you go up the table, the East San Jose, Central San Jose is at 16. And then if you go over to the coast, you're at 14. And that might be why the colors look the same, because they're pretty darn close to the same numbers. So maybe you can really tell when there's difference in the numbers. But when you look at here, you can see the ones that stick out as being really slow. But a lot of these at 18, 14, 16, 12 are really close. And then Foster City, which is going to be right here, is the reddest. But I don't see the difference between Redwood City or Foster City at 8 days and say Redwood City at 18. And the computer is telling me there is a difference. Now let's look at just the active inventory. This is total active inventories without an accepted offer. I will disclose that my definition is different than nearly everybody else's definition. Everybody considers homes that are on the market looking for backup offers to be available inventory. And I maintain, being in this industry for 40 years, very few consumers, very few agents show the homes that have an offer that's binding where the listing agent's looking for a backup offer. I don't see that as being available. And what it does is at certain times of the year, especially at the beginning part of the year, you get wrong information because the inventory is almost zero around Christmas time. Then you come in and you get new inventory coming on the market. You get more transactions, you get more listing agents that say they want backup offers. And it looks like inventory is increasing when my inventory without that underlying contract is actually going the other direction, going down. I firmly believe that my way is a better way of doing it, which is one of the whole reasons I got into doing this back in 1997, is because I wanted to understand the market better for my own investment purposes. Moving on to the number of new listings, you can see when the blue line is above the yellow, that's more new listings coming on the market. You can see basically this last data point, we're basically normal. This crosses over to last year, so we're not there yet. I expect us to follow pretty much the yellow line for the most part for the balance of the year. We'll find out. This is the number of new offers, and this is what's driving the marketplace, this huge surplus in demand. It may not look like a large amount, but when you go from only expecting 500 offers and getting 650, that's almost a third, 33%, it's probably closer to a third. It's a third more offers than you were expecting. When you have that kind of competition, buyers get desperate, buyers overpay for properties. I was just in the presentation last night where, I could justify about 146 for this house, and it looks like it's going to sell for 157. And when I say justify, there was probably 8 very similar homes that closed escrow in April and late March, and I'm using only those to benchmark mine. So now all of a sudden it's jumped another 7% in just a matter of weeks. And that's someone, in my opinion, overpaid for that house. And that's their privilege. Hats off to the seller. I get to go look for another house still. Number of new closings. That's going to follow the number of offers, because once you get an offer, most of those transactions are going to close, especially in a hot marketplace. The buyer is super motivated to keep the seller in that contract and is going to prefer outperform over any hurdles that come their way if they at all possibly can. So the transaction fail rate goes down during a hot marketplace. And so this number of closings simply lags the number of offers accepted by about the 30 days that it takes to close a typical transaction. Now we're looking at the frequency of overbidding. This is how often are you seeing overbidding? And notice that this is looping down a little bit. And part of that is because sellers, it's not that the market's really slowing down at all. It's because sellers are starting to realize the market's on fire and they're being more aggressive in their pricing. And so they're not getting overbid as much. And that's not atypical behavior. And it's also not that much of a change. If this went back up next week, that wouldn't surprise me. What surprises me is how much fluctuation there is in this data from week to week. But again, that's what the drawback of looking at only 1 week. It's Santa Clara County, San Mateo County, single family and condos and townhouses in 1 week. If you did that for 5 weeks, you would get rid of some of this bounce. But then you don't understand what's happening in the marketplace this last week. Here is the frequency of overbidding in each of the different counties. And obviously I still have a few bad. This isn't bad data. This is the change of the MLS where they now don't divide by 100. They report it as 100 times greater than the percentage it is. So I end up plotting it incorrectly. And then I at the last minute remember that and correct it. So I'm trying to get back into the process to take care of that extra factor of 100. This is a bad data point and I don't know what happened and I will go back and investigate that. I believe it is since last week's data. So it's in the last 7 days and it should be pretty easy to find, especially in an Excel spreadsheet. I can put my pointer right there and it will read out the date. But the takeaway here is single family homes in Santa Clara County are outperforming everything else. Normally it's San Mateo County single family homes, which is in second, and coming in third place is condos and townhouses in Santa Clara County. But when you talk about third place, they're basically 70% of the sellers, 2/3 of the sellers, because it's a little bit under 70%, are getting more than their asking price. You get into Santa Clara County single family homes and it's like 83%. That's hard to beat. Here's numbers. And when I say it's hard to beat, here we go and we beat it. Go to Cupertino, Sunnyvale. 96.3% of the sellers are getting more than their asking price. You come up to Milpitas, 93.5%. These numbers are hard to maintain because there's always the one seller that way overprices their home or whatever, and then eventually sells the property with a price reduction, even though that may be a very strong offer. When you look at this in Santa Clara County, the lowest number is Saratoga Las Gatos at 65.6. So 2/3 of the sellers are getting more than their asking price is the slowest marketplace. In San Mateo County, you're all the way down to 50, and they're a little closer grouped together from basically 75 to 85%. So again, a very strong marketplace no matter where you go. Here's the magnitude of overbidding. This is how much are the buyers overbidding instead of how frequently. They're both measures of how much pressure the buyer is feeling. And again, there's a lot of fluctuation, more fluctuation than I would have expected. And you can see we dipped down. Is this a permanent dip down? Probably not. It will probably bounce back up a little bit because we're going back 4 or 5 weeks, 30 days to close an escrow. And the market is strong now as it was 30 days ago. So I think this is just weekly fluctuation. And that's the advantage of looking at days of unsold inventory is you eliminate this time lag to get sale price to understand what's happening with overbidding. And this is the graph of the different magnitude of overbidding. And now you can start seeing the different colors. So South County is one of the lower overbids because they're just not used to overbidding. Buyers are coming in from the north part of Santa Clara County, going down there overbidding, and that's why they're having that huge appreciation. I'm a little surprised this number isn't higher, but 5% is high for South County, and that's one of the reasons I look at the different micro market areas. Saratoga Las Gatos is one of the places that has the least amount of overbidding in the northern area, and yet it's outperforming South County on the magnitude of overbidding at 107.5% versus 105.3%. So, those two numbers almost don't make sense with South County seeing their huge rapid appreciation, seeing the larger frequency of overbidding, but yet the magnitude of overbidding is less. It's just the mindset of the people going down there. Buyers are going to go in and pay what they think they have to. This is a graph that we talked about a little bit earlier. I left it in here twice just to recap. So the best month ever is the dotted line, the purple is the now current month. The dotted blue line is the worst month ever. And as you go up into the right, you get better. This graph you didn't see, but it's the same concept, just the last 12 weeks instead of 20 weeks. Again, the purple week, you can see there's basically 4 weeks that are grouped right here close together. And those are the 4 most recent weeks. Then you have these 4 weeks that you can every once in a while see a break in the line. Those are these lines here. I am going to try to get a bigger break in the line so they're easy to spot. And then you got the 4 lines down here, which are the oldest 4 weeks. So you basically can see with some fluctuation, the market's gone from here and gone in that direction. Now we're changing gears a little bit. We're looking only at single family homes in Santa Clara County. And we're doing that because it's the hottest marketplace and it's the largest marketplace. So here is your best year ever in 2018. Look how close we are down at this end of the marketplace, the red to the orange. And it doesn't start breaking, you might argue that it starts breaking right about here. And I maintain the reason it's breaking is buyers are hesitant because we're only a year past the pandemic to way overbid. In 18, we had been in a strong marketplace for about 18 months. This marketplace probably didn't get strong until about June, because in May and even part of June, buyers, sellers, everybody was leery. Which way is the market going to go? So we're not even a year into a strong marketplace. If this market maintains in the current condition and we get it to 18 months, so we get it to somewhere like next spring and we're still strong, I expect that future monthly data to be on top of this yellow line and potentially exceed it. It all depends, in my opinion, on how far past the pandemic we can get, how far in the rearview mirror. So basically, with the slope of this line, it's showing that the buyers are hesitant to overbid because normally they would have been following that. You can also see it, I believe, by looking at the slope. As you come down here, it rotates, it pivots down sort of like counterclockwise. So now if you pivot this up, I maintain that this slope here is sort of equal to the slopes here, where if you continue to rotate clockwise as you heat up the marketplace, this slope should be stronger. So I'm going to maintain this red line, the current line, April of 2021, is lower than it should be because of what we just went through. The other thing is we only have data from April the 1st, because that's the beginning of April, through April 30th, because that was midnight last night, where all these other months have 5 more days of data into May. They would have May 1st through May 5th. That may pull this line up ever so slightly. I don't think we're going to be able to see the difference, but I don't have a lot of experience here. So here is looking at the median sale price distribution. So the blue lines are the cheaper areas, the areas that are less expensive. The white line areas are pretty close to the median, and then the red lines are the more expensive. And that's based on the median, which is the middle number. So the first number is the 10 percentile number. The middle is the median 50 percentile number that everybody follows. And then the right-hand number, the third number, is the 90 percentile, the most expensive number in the area. And then we're looking at the data for March. Next week is the second Saturday of the month, so we will be starting to look at April data, and we'll go into the details on April. That the median price for Santa Clara County hit 1.6 million. Last week it was, I think, 1.585, so it wasn't a big jump up. And same with the low-end prices, it was somewhere just under $1 million. I'm thinking it was about, it might have actually been 880. So it may have jumped from 880 to, I think it jumped to $1,020,000. So those were 2 noteworthy things that I'll point out, and I will open it up for questions. And if there are no questions, I will be done for the week. So let's see if anyone's got a question.
Lily.
Hi, Lily.
Hi. Yes, I think that's exciting to know that the median price in Santa Clara is 1.6.
It is 1.6 for Santa Clara County single family homes.
I know, that's pretty high. That's good.
I was a little surprised at the jump. Since we got time, well, why don't I should be able to pull up my spreadsheet. Okay, so now you're seeing a bunch of data here.
Yes. No.
So we scroll over so here we go. Here is Santa Clara County 10 percentile, and it's 1,020,000. The median is 1.6 million, and the 90 percentile is 3.2. So the 2 things that were noteworthy to me were the median being 1.6 million, And then also noteworthy, because it's, I think the first time it happened, is the cheapest is over $1 million. You know,
Yes.
you can still buy a single family home in East Central San Jose, South San Jose for $800,000. You know, it's going to be, you know, a smaller home because you're talking about the cheapest 10%, but countywide, you can't do it for less than $1 million.
Yeah, but the areas are varies too, you know.
The area, and
Yeah.
that's what all these numbers are, you know, just since you're in
So
the details right now,
yeah,
from
yeah, this
where
is
line right here that the cursor's on up
yeah,
are all single family homes. From here down are condos and townhouses, and then
yeah.
it repeats. So you can see, well, you can see that there's where it changes. So just even yesterday, the median for Santa Clara County was 1594. So when I
Mhm.
say it's at 1.6 million, there's probably a fair number of transactions at 1.6 million, and this one may be the one at 1,59999 plus $1. And then, you know, there might be 20 or 30 transactions at 1.6 million, because even in this marketplace where agents probably coach their clients to put in odd dollar amounts, a lot of consumers put in round dollar amounts. They just migrate. The house is worth about 1.6. Let's put in a 1.6 offer. Okay. You know,
Yeah,
where
right.
if you went in at 1.6 and $3,000, you're standing a much greater chance of getting the property because you're beating out any other offers at 1.6, and that's where most people migrate to.
I'm amazed to see Palo Alto like that.
You're interested in seeing Palo Alto like that? This is Palo Alto and Los Altos. So the cheapest single
Yeah.
family home is 2.6 million. The median is 3.7 million, and the most expensive end is 5.56 million. 2.6 for the 10 percentile, 3.7 for the median, and 5.6 for the 90 percentile.
Yeah, thank you. That's amazing.
It is amazing, but you know, the thing that, you know, 5.6 sounds like a high number, but countywide, where you throw everything in the blender, it drops to 3.2. That's still a high number, you know, to
Yeah.
realize. But you know, and the other thing that's interesting is between these two numbers. So in $2.25 million from 1 million to 3.25. So in a $2.25 million range, 80% of the homes are in that little range. So, you know, even though we all see these homes that make the media where, you know, they're asking 25 million and 40 million and 38 million and things like that, those are really rare and they're not common. And the bulk of the homes are going to be between $1 million and 3.25 million. That's still a lot of money. I mean, we can go anywhere else in the country and they would probably look at us cross-eyed. What do you mean you spend $3 million for a house?
Especially for the little houses there.
The
Anyway,
little
that's
houses that
interesting.
are
Thank you.
dilapidated. It's the, you know, the land is what's expensive, yet people still price homes price per square foot. You know, if you can build a house for $400 a square foot, you can build a 2,000 square foot home for $800,000. But now if that 2,000 square foot home is going to sell for $3 million, it's the land that's expensive, not the structure you put on the land.
Right. Amazing. Thank you for your good charts. This is
Not a problem.
really helpful too.
Yeah, well, that's why I'm here, and I do appreciate the interaction, you know, and let me pull back up and do a new share, and I'm going to learn how to share my whole computer so I don't have to undo it. If you want the handout to look at it, you just put in this long URL. So again, it's tinyurl.com/RE for real estate, market graphs, the word handout, and then 2021, and you replace MM with the month, which is 05, and the day with 01, because we're on May 1st, and you'll get the 23 slides that we went over. We won't get the Excel spreadsheet because I wasn't planning on going into that detail, but I don't mind doing that.
Yeah, what about that other one you used to have that you flashed on really quick? It was with all the, I don't know, it's the main graph, I think, that you show. It's got goes back over 20 years. That particular, it's not a graph, it's I guess you'd call it a chart.
Oh, yeah.
The one
Okay,
that
the
had
table.
about,
I know what you're talking about. It's the last one I did.
it has red,
Right there.
green, yeah.
Right, this one.
No, I was shocked to see that at 85. My gosh, that's the one. I'm sorry. What do you call this?
This is
Anyway, it's a good graph.
well, it's a chart. It's not, it's a table. A table is what people would call it. So this is This is the month of March. So this starts on March the 1st and then goes forward for 35 days. This is what gets updated next month. And we'll probably do the 4 charts at the beginning. Then we'll go into the monthly data. And then if we have time remaining, we'll go back into the details of the weekly, because the second Saturday is devoted to going over the data. So that's where I go back 20 years and we're focused on single family homes. It's just more, today's episode is to try to figure out what's happening in the marketplace right now. The monthly data is more a historical preservation or look at where the market's been for the last 20 years.
All right. Well, thank you. Anyway, that
Thanks,
last
Carol.
one before this was great. Okay. Thank you.
You're welcome.
Thank you, Richard.
You're welcome, Lily. Anyone else with a question? All right. Thanks for joining, and I'll see everybody next week. Take care. Go ahead.
One thing I was going to say is going to be sure to mention next time, if you unmute yourself, you can do that, which you did at the end, because people may come on and not realize they don't see that until you move your cursor. So that way they know to unmute themselves.
And I do like the active interaction, but I do want to get through the first 4 slides without interruption. But I will try to make a point of asking people to unmute themselves if they have a question.
Beautiful. Okay. Thanks again. Bye-bye.
Right. Take care, everybody.